Hello and welcome to this MoneyFest session where we will be asking why every central bank will have its own digital currency in a year's time. I'm Izabella Kaminska, the editor of FT Alphaville, and I'm joined today by a very esteemed panel of experts, including Steve Kirsch, CEO of M10, which is a Silicon Valley startup focused on payment rail modernization, Nicolas Kozakiewicz, Chief Innovation Officer at Worldline, which is one of the top payment service providers in the world, and Tomáš Holub, who is member of the board at the Czech National Bank. Apologies for bad pronunciations. So welcome everybody. Thank you for joining us. I thought I would just kick off very simply. Why should we be going ahead with CBDCs? And perhaps we could go straight to the horse's mouth, to the central banks. Tomáš, what is it? What's in it for the central banks?
Well, I think one of the central banks that makes this debate urgent is Sveriges Riksbank, the central bank of Sweden, because in Sweden they have seen a very dramatic decline in physical cash in circulation. And this has led their central bank to think about the future, whether they should and could completely replace physical cash with an electronic form. And they have initiated their e-krone project exploring this. So I think in Europe they are one of the most advanced central banks in that regard, even though my impression recently is that they have also started to realize some risks associated with complete elimination of physical cash, because physical cash is a foolproof way of payment. It still works even if you have disruptions to internet connection, to electricity supply, stuff like that. And it also serves important functions to less educated or financially literate people. So there are many issues associated with completely eliminating physical cash, but certainly the idea that there could be an electronic version of it in parallel is very appealing, at least in Sweden and a few other Nordic countries.
And do you think it's very important that this is a sort of people-led phenomenon? I mean, in Sweden, it's very much the case that the decline in cash use is leading the banks. It's not the other way around, right? It's not a top-down push from the central bank. It's a responsive sort of situation. So do you think that is that a good template for the rest of the world then? If or does it necessarily have to apply to countries which are also already experiencing a decline in cash transactions?
Yeah, I think it makes sense that it should more or less respond to demand from people. That's why the Czech National Bank, we are not one of the front runners, because Czech Republic is still very much cash-based in the traditional sense. In our case, cash in circulation is something like 12 or 13% of GDP. So cash is still very popular. And as long as this is the case, of course, there is no big urgency for the central bank to really think about establishing an electronic version of currency.
So my next question in that line, and maybe Steve or Nicolas would like to join, offer their thoughts as well, is why then should we do a CBDC to tackle this issue of declining cash use? What's wrong with the current RTGS system in the sense, what sort of solution are we looking to? Why should we so-called expand the balance sheet to the retail space in this new incarnation of a CBDC?
Well, I think it's inevitable that we transition to digital for transactions, for payments, and for cash. And so I think it's just a matter of of time before that happens. We just can't continue to operate on the infrastructure that was put in, decades and decades ago. And CBDC is effectively just a digital version of paper. And so it's just a little bit more convenient. It operates exactly the same way. And you can have offline transactions with digital just the same way that you can do it with cash. It's a little trickier because you have to have secure devices. But I think the point is that we can make the transition from paper to digital and have exactly the same benefits, have exactly the same resilience to, what happens if all the computers crash? You can still do the transactions. So we can, in fact, with technology, we can replace paper and move to digital. And I just think that's inevitable for any kind of cash transactions. And I think the more important thing, though, is that we have to go beyond CBDC, because CBDC is just the M0 component of transactions, and most of the transactions today are M1 money. So we have to have a system that accommodates both M0, which is CBDC, and M1 transactions.
How do you explain, I mean, when you talk about M1, what are you talking about specifically? And how does it differ to, say, digital bank deposits that we already have?
Well, M1 money is money that's created by banks. And most of the money, the vast majority of money is money that's created by banks with a certain ratio of their actual cash balances. So the M0 money is the central bank money. That's the very precious, rare commodity that people have. But when you look at people's deposits in their savings accounts and in their checking accounts and in their business accounts, that's all M1 money. And so most of the transactions that happen when I pay you, that's all M1 money. And so modernizing M0 is interesting because that's part of the equation, but you need to modernize both, and you need to have a whole system which modernizes the entire infrastructure. And,
right. So that, I mean, that's specifically my question. Specifically, so how do you see, because obviously we would be creating a CBDC, but how do you see the CBDC being sort of imported into the world of M1 and bank deposit? Because obviously bank deposits are already digital. We've already got sort of clearing systems and all sorts of, mobile apps. Every bank has its own sort of system. Faster payments are available in lots of advanced countries. So how would CBDC change M1 specifically?
Again, here, if I can jump in, I mean, here we're really talking about CBDC, so central bank money. So the M1 we're talking here, which is commercial bank money, is not really in the scope. I mean, here we're really talking about the money that is created by central banks, not the other one. So because the other one is already fully digital. And just to get back to your original question, so cash.
I'll disagree. It's not fully digital in the fact that I can't transact with you in central bank money digitally today. So it's not
because
fully
most
digital.
of the cases were not because most of the cases we're not exchanging central money. We're exchanging commercial money. It doesn't.
I totally agree. And that part of the transaction, when the M0 money of that is all electronic, totally agree. So,
but going back to the cash, so it's true. Cash has very good sides. It has assets, but the world is changing. I mean, the world's changing because people are going more and more online. And if you want to buy something online, if you have cash, it doesn't work. And because of things like the COVID, people tend to let the cash on the side and rather go with payment with cards, with NFC cards and touchless kind of payment. So all these are making the cash in the months to come, in the years to come, probably less and less used in some countries, of course, because we cannot speak about the world as a whole. It's not a whole. All the ways of using money are way different from one country to another. But this is one of the things that are making those things move. In Sweden, they stopped using cash. I don't know why, because I mean, in Europe, it's not so far from Czech Republic, where obviously there's a lot of cash used. In Germany, there's lots of cash used as well. So really, I mean, it's really the way people are used to use a cash. In the US, there used to be lots and lots of cash. We can remember people having rolls of bills in their pocket, and that's the past. I mean, I'm sure we can still find people like this, but so things are changing. The world is changing, and we're going like in all verticals, we're going towards more digital. So I think it's just the way the world is moving forward.
So just pulling back a little bit, just because it's a good moment to ask, Thomas, why is it then that cash, why is the disappearance of cash such a thing of anxiety for central banks? Are there impacts for monetary policy? What's the factor that is stressing central banks? And also in that same capacity, would you agree to some, is it not the case that every country has a different sort of profile when it comes to cash use? And that also means that not necessarily one size fits all with respect to the solutions that might be applied.
Yeah, I agree. I already compared Sweden and Czech Republic. The situation is clearly very much different. And I don't say that we will not go digital in the future here. I just say we don't need to be one of the front runners. We may be more now on the sidelines watching what Sweden and other countries are doing in that area, and then probably learn from their experience. So there are country-specific differences in this regard. Secondly, I think in Sweden, it was originally the central bank and the state that have somewhat initiated move away from physical cash, but maybe now they are concerned that this might have gone too far, because cash in circulation and the right to issue cash has been the traditional source of financial strength for central banks, which underpins their ability to implement monetary policy and to look through potential financial side effects of their monetary policy operations. And of course, if cash disappears, there is a debate whether you should replace it with electronic currency. My concern here is that it would actually make the money issued by central bank, this M0 component, and current deposits at commercial banks, this M1 money, very close substitutes. So we could fundamentally shift the borderline between the central bank and commercial banks in a way that I think we still don't fully understand in terms of all its implications for monetary policy and financial stability. And for me, this is really the most serious component of this debate, because I believe that technologically it can be done very quickly. Of course, we need to pay attention to cybersecurity, stuff like that. But I think the more difficult part of this is to really think and understand what the transition will do to our overall monetary system. It's not just about making payments, but also about doing monetary policy, guaranteeing financial stability, and these important policy topics.
Yeah, what Tomáš is saying here is really important, because the security part really has two sides. There's the hacking risk, that's one thing, but it's also the fact that here central banks, they used to be in a fenced environment, in really a closed environment, and doing that they will have to open up, and open up just opens risk by design. So it's a big shift. It's a shift in way more ways than we just simply imagine just looking at CBDCs in the articles and newspapers.
So I'll take the other point. Let me take the other point of view here, which is that Riksbank put in their RFP basically that they were interested in doing these offline cash payments in order to replace cash, because they realized that Sweden basically you couldn't even find cash if you wanted it. And so they actually had a need to go and they discovered that you can't just get rid of cash, that you have to have a digital substitute in order to operate. So all they're doing is just replacing the paper cash with digital cash. and that's it. We're not changing the ratio of M0 and M1. If you want to do that, that's like, really disrupting the apple cart, but there's no real need to do that. That's kind of optional. And if you go there, this is like, police line, do not cross. I would not go there, and there's no reason to go there. We can have payment modernization without changing any of the monetary policy.
Isn't the concern, and this at this point we can move to the sort of challenges, I think, in terms of deploying these CBDCs, isn't the concern that, you say you're not really changing the ratios, but this is the point here, especially in Sweden, is that it's a people-led phenomenon. People are of their own volition abandoning cash. That means also if you give them a substitute for cash, like a CBDC, you can't really say to them, well, you can only keep it. I mean, you could mandate and say you can't keep more than, say, $25 worth or krona worth in your digital CBDC wallet. But if you're creating an open-ended product, then the users are able to essentially transfer all their deposits from the banking sector at a whim into the CBDC, posing funding issues for the banks and other sort of system-wide implications. So in the design of these projects, isn't it the case then there are challenges that aren't just related to creating a substitute? There are also sort of structural issues with respect to how these systems should be deployed, how much capital can be should be allowed to sit in these things, etc., etc.
If I may just correct one thing, you said that Swedish people abandon the cash. I would put it differently. They're favoring other means of payment. They don't abandon cash. It's not a willingness. They did not decide to drop cash for any reason, philosophical reason or whatever. They're just favoring other means of payment, just like WeChat. People are using more WeChat kind of transactions.
But indirectly, if a consumer is making a choice, right, that's saying, well, I'm going to use digital rather than cash, they are
exactly. So central banks are looking. They're not pushing back cash. They're just preferring advantages of another mean of payment. So one of the way of CBDC say we keep quote quote the cash, and we bring to cash the velocity, the digital side, etc., that is favored by consumers, and that's just a way to respond to their needs as well.
Yeah, it's a natural evolution. In Sweden, it was just so much more convenient not to use cash, so you have this natural evolution that led you to the to Riksbank needing to have a digital version of cash.
But the point is that once you provide them with this alternative, there is a risk that the banking sector gets deprived of funding, and sure. And really the issue isn't the real challenge that if you have a mass digitization and the kind of collapse of cash, it's the real issue at hand is one of financial inclusion. The small minority of people who can't get access to private digital services require some sort of state alternative. That's the real motivation for producing these things. But if that is the case, shouldn't we also consider alternatives such as mandating retailers to continue to accept cash if the issue is really one of financial inclusion? I mean, that's an alternative.
Yeah. Technically speaking, what you're saying is already the case with all the digital services of states, because all the states go digital, and now whatever you want to do, if you don't have an internet connection, you can't do it. Or you have to go to someone who has an internet connection, or go directly to the state's branch or whatever. So you can do it the exact same thing with CBDCs. With CBDC, nothing prevents you from printing CBDCs. And you could have a CBDC, which is really a digitalized version of a coin, or a digitalized version of a banknote that would be printed in the form of a QR code or whatever, that could be given from hand to hand and scanned back into the system. So there are technical ways of still having some easily exchangeable means of payment that are based on the CBDC still.
So, because we're running out of time, I just wanted to close with a question with respect to how one of the main issues that remains is the topic of privacy. How are we going to overcome that? The topic of the panel is that we will have CBDCs very soon, but how can that be the case if the issue of privacy isn't entirely overcome and these debates haven't been had? How can we sort of convince the Germans that a CBDC will respect privacy?
I'll be provocative. If you're in the digital world, there's no such thing as privacy. Privacy does not exist in the digital world because you are somehow traced, willingly or unwillingly. So you can go as far as pseudo-anonymous state, but privacy doesn't really exist. You can always be traced.
I think it all depends on how things are done. For example, I could get a smart card at a grocery store, and as long as they're not tying it to the smart card number that I buy, for example, then my transactions are more or less anonymous. And so you can have...
But they'll follow your iPhone.
Well, no,
so
I mean, it's on a smart, yeah, I mean, there are ways that you can do this,
always,
right? But it doesn't have to be embedded in the system in terms of having the same, I mean, you could say the same thing about cash. If I go to an ATM and take out cash, you can track me on my iPhone.
So it's a contentious topic, and that's why I'm going to leave the floor to Tomáš to tell us why. Are we going to be having CBDCs within a couple of years, do you think, or are issues like privacy and the cultural norms within societies going to maybe slow the process down a bit?
Personally, I think if we really talk about retail CBDCs, it's going to take more than 2 or 3 years, even for the front runners. Maybe in China is already doing a kind of pilot project. Maybe they can be more advanced because privacy is not such a big issue there. The state is already tracking the citizens very closely. It's getting a lot of information. But in Western democracies, the privacy issue will be one of the key political topics. And it needs to be addressed and solved to make the whole project feasible. So as I said, I think technologically it could go forward faster than from the political economic point of view. That will be slowing the process.
A fantastic point to, I think, leave it on. And I believe we've run out of time. So we've only just scratched the surface. It's a hugely complex topic. And certainly the opinions in this panel, the varying opinions show that there isn't necessarily a one-size-fits-all solution out there just yet. So thank you very much for joining me. And good luck with all your endeavours. Thank you.